if today went anything like my day went, we had some interesting intraday structure to start the morning, and then around 10:50 Eastern, we got Bosticked. All right, that means that Raphael Bostic, FOMC member, had a speaking engagement, and we can see what happened in the wake of that. And the challenge is, how do we avoid FOMC volatility? Well, first of all, we have to measure volatility, and we have to know when it's going to happen. It's not always going to be volatile. Different FOMC members speaking don't necessarily have to rock the market, but we know they can, and in today's example, oftentimes do. What makes this challenging is we are still in an environment of a lot of confusion about where the FOMC is ultimately taking rates. In other words, where are they going to keep hiking and then stop? Expectations are still 5.25% to 5.5%. They could be maybe a quarter less or a quarter more, and the markets are going to gyrate wildly depending on which outcome that may be. That's the challenge that we have as traders. If you don't know who I am, I'm Raghee Horner. I'm the lead trader at Simpler Futures, as well as the Sector Secrets Mastery. And my fix for this environment, my anti-FOMC shenanigans approach is lengthen the time frame. Just that simple. Intraday time frames are far more susceptible to volatility, which is fine unless we move outside historical price movement ranges or break morning trends. Then it's very, very tricky. However, if we focus on longer term time frames, the way that I think about it is it's like having an off-road vehicle, right? If we have really great travel in our suspension, we can handle the big boulders and the ditches that come our way. But if we don't have that, if our suspension can't handle that kind of really rough terrain, when we get in the rough terrain, we're just going to end up getting stopped out, and that is not what we want to do. So I think of it this way. I want a big four-wheel drive truck to deal with what we're dealing with right now. And the first thing is, in many ways, get bigger tires too. That's our 1 hour chart, and that's our daily. So we're going off-road in many ways with the FOMC. So we're going to deal with that, those FOMC shenanigans, by saying, well, does an hourly or a daily time frame better allow us to wait for price movement ranges that require more of this move? So not only we're not just playing defense, gang, we're playing offense. We're playing offense in a lot of situations. So the idea here is, and let me just use bonds because this is a market that if you've been following these updates, you know has been really important. Bonds have been in a neutral environment, oversold stochastic, good support from the V-score, right? So I'm using all these different tools together. You don't have to have all of them, but we're looking at volume, we're looking at structure, right? And we're looking at, in this case now, volatility. Right here, we touched the support of the daily price movement range. This would have been on the 21st of February. And that held, and now we can see prices are moving higher. I'm anticipating 125.21 in ZB to be maybe where a near-term ceiling could be. All right, so one of the questions, and I love this question, I hope you're listening. One of the folks who was watching the update from Tuesday from John and I said, hey, would the sell-off that we saw back in here, would this DPMR have said we hit a ceiling? And yeah, gang, right in there. And now the question is, are we at a floor? We could be. And I'm looking for a minor low pattern to confirm that not only was this DPMR area support. Now, in fairness to the DPMR, we just barely nicked it, right? But that's still support. That's an area of support. And I got to say, if I kind of extend out this area of support, it's doing a fairly admirable job of holding, right? Of holding this area. And this sets us up for PCE, 8:30 tomorrow Eastern time, and a possible minor low breakout with the candle for the 24th, right? We want to see what the S&P does. So I'm still bullish, gang. I'm still bullish, and I'm showing you why I'm looking at bullishness. Neutral market, daily price movement range support, and let's see if we can get some follow through. All right, let's take a look at a couple other symbols. I've been getting some questions about things like, Microsoft or XLK, some of these more important weighted sectors within the broader averages. And I am bullish. I'm absolutely bullish. Something like XLK. You have 200 propulsion and we have the daily price movement range. We need prices to get in there. But the closer we are to these levels, the more I want to remember, I don't want to be a short seller. In fact, up in here, that's where Darvis 2.0, that's where the DPMRs are overlapping, saying, look, if we're going to be toppy, that's the place to look. And then that's an easier, clearer route to the downside. Okay, but the closer we get to daily price movement range, the closer we get to the PMRs, the closer we might get to a Darvis if we had one here, this is where we're thinking this is a possible landing spot for price action before we move back up. So knowing which end of the range we're on, whether that be Darvis, whether that be DPMR, really, really important. Let's look at the heaviest weighted stock in the XLK. That's Apple. I love this daily price movement range down in here, but the 200 propulsion's doing a great job. So what we're talking about is not getting rid of all the things that probably you've used from me, whether that be V-score, propulsion, grab candles, but rather how do we supplement our charts to add another layer of volatility on longer term time frames that are able to weather those FOMC shenanigans. That is what we're talking about here. And if you didn't know already, let me tell you now, we have a webinar tonight, 8 p.m. Eastern, 7 Central, where I'm going to be talking about the tools, the tactics, showing you examples for what I've been testing for the better part of 10 months, a process that I have been testing and using for 10 years. What's exciting is we're able now to automate it. This is why I love this URL, simplertrading.com/auto. Now, if you're catching this after the webinar has happened already, which again is 8 p.m. tonight, don't worry, head on back to this page, auto. You can catch the replay and also see what it is that we're doing with 1 hour time frames, daily time frames, volatility, market structure, all those pieces being put together. All right. If you're already a fan of V-score, if you're already using the multi-trend, great. You've got a fantastic edge. Come check out what it is that we are doing, simplertrading.com/auto. And this is what we found over the last 2 months. We're going to talk about this a little bit more. It's just the math. We're working 68% probability levels to about a 72% win rate. So if you're interested in seeing what I'm doing, check it out tonight, 8 p.m., simplertrading.com/auto. Thank you for being a member of our community. Thank you for wanting to become a better and better trader. Traders are my kind of people. Love the conversations and charts and coffee. Don't forget, every morning, 9 a.m. Eastern at the Simpler Trading YouTube channel, we have charts and coffee. So if you have any questions, come on over, check it out. I'll see you all in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.